Welcome to our Market Masters edition, a special one. Well, the markets have been scoring new highs almost consecutively for the last week or so. And so have the US markets. So is there still value? And if there is, where? Sridhar Sivaram, the investment director at Enam Holdings, joins us. Sridhar, good morning, and a heavy responsibility rests on your shoulders.
Thanks for inviting me, Latha.
Okay, well, first up, today we have got this Hindustan Aeronautics order. PSUs, let's keep banks away.
Yeah.
PSUs have really gone through the roof, although they're getting good orders.
Yes.
How confident are you that, with the return of the same government, this bet will work?
So if I go back, say 2-3 years back, we were very bullish on PSUs in general, including banks.
I should have said that in the intro, that we learned about PSUs from you. So where do you stand?
So they were deep value, say 3 years back, when we started looking at them. And it looked like your risk reward is extremely in your favor. Normally what happens in markets is when you have a sector or a segment which takes leadership, it doesn't fade away in 2-3 years. It goes on for at least 8-9 years. So there will be phases when there will be irrational exuberance in this segment. But I don't see, so if you ask me, do all the PSUs look very attractive right now? The answer is no. Risk reward, isn't looking great. But at the same time, I don't think this segment is going away in a hurry. The leadership will continue. And we'll see the government also supporting in terms of, new orders. And earnings will be strong, but valuations pricing in a lot more. That's how I'll put it. So I don't think the risk reward is looking great. But at the same time, I don't think this sector is fading away in a hurry.
Okay. Pricey, but it is still performing.
Yes.
Okay, can you identify pockets over there? For instance, would you go with power because there is such a screaming demand? Maybe there is excesses in defense and excesses in rail stocks, but power, even the ground situation looks...
Yeah. So power in general, we are very bullish, whether it is PSU or non-PSU. Just to put some numbers, that if you look at say solar, we are currently about 75 gigawatts. We are expected to triple the capacity in the next 5 years. Same is say with wind. We are at say about 40-45 gigawatts. We are expected to double in the next 5 years. Even thermal, we are underinvested. We are about 225 gigawatts. We are expected to add another 50 over the next 4 to 5 years. What we think is that this entire ecosystem will do well. T&D companies.
So even power generators?
So power generators, the suppliers of equipments, boilers, wires, you just name it. The entire ecosystem, when you go to add so much, the ecosystem will do well. Even utilities will do well. So utilities which have open access, who have not tied up on long-term PPA, they are selling at 8-9 rupees in the open access market. But that is a small percentage of their overall revenues. This entire ecosystem will do well. We're quite bullish on the power, utility, and the entire space there. And it's left to individuals to pick and choose, where they want to play.
But what I mean is even PSU entities,
yes,
like the
even
NTPCs,
the PSU entities
power
will
grid.
do well. You even see the financiers in that, PFC, REC. They have 4.5 lakh crore book now.
Yes.
So it is not a small company anymore. And they are guiding for 15-20% loan growth. We can question the business model, but the point is that they are also in a very sweet spot. So as I said, the entire ecosystem is looking very good right now. And it is left to individuals to pick and choose what they want. So we are quite bullish, and we have our own, biases there, but that's how we look at it.
Okay, now let me come to the first thing that you trained our eyes to. I think 2 years ago, you trained my eyes at least to the PSU banks.
Yes.
So finances in general, it's very obvious that an HDFC bank or an ICICI bank are still value. I think they're all still at, 2 times book, 2.5 book compared to his. But what about PSU banks?
Yeah. So PSU banks, if I go back, say 3 years, if I look at my own portfolio, it was 60-40 in terms of PSUs versus the private sector bank. They outperformed so much that there's 80-20 now because the private sector banks did hardly anything. So if you ask me at this stage, the private sector banks are looking good because our play was that we thought that the credit cost will normalize. Credit cost was north of 2%, and they have started to inch down. You look at SBI last year.
I think 20 basis or something.
Yes, they were like, I think 15 or 20 basis points. The long-term average is around, say, 100 basis points, and they are at such a level that our view is that now it's very difficult for credit cost to go any further down. So it can only go up. So we still like a few PSU banks. It's not like we don't like PSU banks, but if I look at the basket now, the private sector banks look equally attractive. And PSU banks, which have higher credit cost, is where our bias is, because we think that the chance of the profitability there is higher. I just add one more point here, that if you look at PSU bank as an aggregate profit, say FY21, their profits were around 25,000 crores. And last year when we ended, it was about 1,40,000 crores. So the point is that the PSU banks have done well because they've actually delivered numbers, and stocks haven't done as well as their profits have. So actually they have in a way got derated. But from here on, it's very difficult to replicate that sort of profit growth. So there will be some normalization.
Okay. Well, since you said PSU banks, of course, they gave a dividend to the government, but bigger was the Reserve Bank dividend. So let me come to the budget and then go to specific stocks. Are you expecting that there will be some largesse by the government because of the election result, and also because they have more money? So does your investment strategy change? Everybody is talking about consumer goods now, FMCG and stuff.
No, our investment strategy is not changing. We think that the government gets about 1 lakh crore extra because of the RBI dividend. They may use that for some social schemes. They may increase allocation to Manrega or any of the other social schemes. They may try to boost with whatever they can. The other point to keep in mind is that the government can only do that much when it comes to capital expenditure. It's not easy to spend. They did almost 9.5, 10 lakhs last year. They'll do 11.5 lakh crores this year. It's not easy. You cannot just say that I'll do 15 lakh crores. I mean, it's not even the absorptive capacity in that segment has to be understood, that these are long gestation. There are a lot of challenges to it. Absolutely. So even if the government wants, you cannot actually, even if you put that number there, you cannot actually execute it on the ground. So I think there's limitation on that. Government is doing whatever they can to boost investments. I think the private sectors will have to take some of the mantle now. We are reaching capacity utilizations from where you normally see private sector capex coming up. We are seeing early signs of that. So we think from a budget standpoint and an investment in the portfolio standpoint, we are not making any changes. We think the same will do. What was doing well earlier will continue to do.
Okay, so you're not into FMC. You wouldn't pick them up.
We do have some consumption stories in our portfolio, but we're not changing our allocation. We're not saying go and buy all the staple companies because the government may or may not do something to boost consumption. Those are really very marginal in terms of actual impact on the ground. We also think that inflation is very sticky. So it's not that, so one of the reasons for consumption, especially at the rural level, which is, stagnated or has been very low level, is also because
food
of
inflation.
Yeah, so it's inflation. And I don't think that is changing in a hurry.
Oh, yes. Food inflation is a problem. I mean, even now, it's the usual June phenomenon, but there is a huge vegetable inflation. But then we are told that it is a La Nina year and therefore the harvest should be better. Let's wait and see. Okay, instead of asking you leading questions, an open-ended question. Where are you seeing, the valuation of the market itself is not expensive. At 19x, it's actually probably at a discount to its long-term average. Therefore, there should be investment opportunities. Where are they?
So I think to a very large extent, I would say it is very bottom up right now, because in every segment or every sector, we are seeing some excesses. But as I said, power is one segment, financial, especially in the large cap, which we've already discussed. We like pockets of pharma, manufacturing. Now, pharma also is manufacturing, but within the manufacturing, we also like, say, the EMS, auto ancillaries, some chemicals. So I think a lot of them are very stock specific. But I would say manufacturing is the other theme where India is really picking up in terms of it's no longer China plus one. There's also Europe plus one, because Europe also has their own set of issues. Some of the defense-related changes that the government made in the previous 5 years is having a positive impact because of the compulsory manufacturing. 30% you have to manufacture in India. So those things are helping some of the companies. So on the whole, I think the entire manufacturing space is looking interesting, but the valuations are pricey. So that's the caveat.
There are drones and rockets in the private sector
very much.
as well.
Yes.
So we have to, actually coming to that new gen companies, I'm not talking about rockets and drones, but even e-com. Today, Zomato was in the news. Do you think their overvaluation is over and now it's payback period? Do you like that e-commerce space?
So I think in pockets we like. So when they got listed in 21,
it was
we
crazy.
we were not very happy because there was no path to profitability, and they were coming from a private space where they had tons of money chasing them, and the model was just growth. There was no path to profitability, and they soon realized that in a listed space, path to profitability is very important. So most of them have changed. Now, if you see the discussions that you have or the guidance that they give is all about when they'll be EBITDA positive, when they will be profitable on a PAT basis. I think that makes the whole thing interesting now. So we are invested in some of them.
You are invested,
yes,
not looking for investments.
No, we already invested.
If you have to look for investments, where would you look? Additional money.
Latha, I don't think we are looking for anything specific which is like, this is what I want to invest. If we find something
you
exciting.
caught PSUs before. You caught Bank of Maharashtra before the market realized. So is there something, you can't talk stocks.
Power is the only one where I can say that, it's such a large theme that you have a lot of opportunity. Manufacturing is the other one. See, we also like pockets, like aviation is, travel and tourism and aviation is a great space. I mean, if you go to the airports, you know what's happening there.
Absolutely.
So I think anything related to that is
travel and tourism.
Telecom is something that we like because we know that the ARPUs haven't, kept pace with the value add that these companies are giving. So eventually, you know that the ARPUs will go up. So there are pockets and spaces where there is interesting opportunities to invest. But that's how you construct a portfolio, right? So you would have, companies.
You make the full thali.
Exactly. And that's how, so when some sector performs, the other doesn't. Eventually, as a portfall, it does.
That is the final question I have for you. Like I said, the market as a whole is not that expensive. It's actually lower than the long-term averages. What is your sense about the market itself? We've been scaling new highs, which is legit. Every day, the Indian GDP is higher than what it was the day before. So it's legit that the market should go up. But are you getting a sense of frenzy?
I think there is. I mean, especially in the mid and small cap space, there is a frenzy. And I think it will be, at least my personal view is that this year may not be that great for the market. I mean, despite all the volatility and the hype that we've seen, markets are up possibly 6% for the year. Yes. So it's not like we've...
And the Nasdaq is up 18%.
Yes. So I think we will have a more reasonable year this year because one, the earnings growth, our own expectation for the current year is in the low teens earnings growth for this year. And the quality of the earnings may not be that great. It comes from segments where you don't actually give that higher valuation, especially say commodities. So we think that the markets could consolidate here. I don't see a massive correction unless there is something drastic in the US. So given the liquidity that the market possesses, so maybe 5-10% correction is par for course. We do see that correction happen on a regular basis. I don't see the markets correct too much, but it will not. I mean, I don't expect the markets.
Super returns of the last 2 years.
I mean, I don't expect, but markets always have a way to surprise, But that's how we are positioned, that we don't expect something, huge to happen. So every dip you try to add. So it's not like you do have some cash and you use that every dip. We got a dip 10 days back, so we were very active at that time.
Okay, that's good to hear. About 8%, I think, year to date on the Nifty. And you can't complain about an 8% exactly. in the first 6 months. We have, more scope to grow. Thank you very much, Sridhar Sivaram, for giving us an encyclopedic view of the markets and to look for, areas where you could be ahead of the curve. And Sridhar mentioned so many in terms of travel, tourism, power, manufacturing, which we can all look at. With that, it's a wrap on Bazaar. Chartbusters coming up next.